Cryptocurrencies are feeling the heat, with Bitcoin hovering around the $61,000 mark, down about 5% in the past week, as uncertainty over monetary policy cools demand for Bitcoin ETFs. Joining us now is Lucy Gazmararian, who is founder and managing partner at Token Bay Capital. Lucy, thank you very much for joining us. There seem to be a lot of connections between Bitcoin and the macro, and some reporters are looking at the link even between consumer confidence in the United States, saying when you see a dip in that number in June, it is telling you that there are links across to the Bitcoin market. Just explain some of the ties here and how people are thinking about buying Bitcoin when the macro looks a little bit dicey.
Yes, I mean, crypto and Bitcoin obviously was the first crypto asset, has historically been treated as a very much a risk-on asset. And as crypto is becoming more intertwined with the sort of institutional, traditional financial markets, it has the capacity to move in tandem and be impacted by macro news and geopolitics, whether the Fed is going to raise rates, tightening, loosening of monetary policy. There is a correlation there. But what's interesting about crypto, because if you look under the hood and at the fundamentals of crypto, it's a very distinct asset class to any of the traditional assets that are trading on stock markets. We can see that correlation break down, and that's when it's pretty interesting. So there are times when it's correlated and times where it is less correlated.
Lucy, I think it's fair to say the one-way trade on some markets has simply disappeared at this stage. A little bit more fear factor coming in, and we're seeing it around even European stock markets, to certain trades around the United States. Does that mean the bull run for Bitcoin is now over for the time being?
So what we're seeing with the Bitcoin cycle this year is actually in keeping with other Bitcoin cycles and other crypto cycles that typically follow this sort of 4-year boom-bust momentum. So right now we're about halfway through this bull market. So if past history is anything to go by, we've got at least a year and a half to go. So we'll see the crypto market sort of reach a top late 2025. Any pullback, so we've seen a recent pullback of around 15%, is really in keeping with what we've seen previously. If we start to see a 30% drop or a 50 or bigger than 50%, that's when we can start questioning whether this bull market is indeed stalling and whether there's other factors at play. But as it is at the moment, these pullbacks of 15, 10, 30% actually is pretty standard for crypto.